Okay, and we are live. So welcome everyone to another episode of the Crypto Hour. Today is Friday, the 12th of June, and it's quite an important day in investing as we have the first of the big three. Sorry, background noise.
Sorry.
That's okay. The first of the big three tech IPOs, they actually come to market. So today, the SpaceX IPO, will go live. So the shares will start trading in just over 5 hours time, and it'd be interesting because that is expected to debut at a valuation of 1.7 trillion, which will make them immediately one of the top three companies for valuation on the American market. And there has been in the background some movements behind the scenes. Obviously, people are rotating capital to invest not just in this, but also the other two IPOs that are coming soon, which will be the OpenAI and Anthropic. So there have been some people that are talking to this as a possibility as another dot-com boom. We saw at the turn of the century. But this is kind of like substantially different from what we saw then, when anything with a like with any reference to the internet was literally overvalued and overpriced, and with valuation completely detached from reality. Now, these three companies that are coming to the market, they will be obviously subject to outsized volatility, as always when there is a frenzy, especially with limited amount of shares they are going to make available for trading. We might see some really big moves today, and in the future. But all the companies have actually got like a kind of like a proven track record, a model that is very solid, and they're already producing revenues at a quite substantial rate. Although, as all companies, they reinvest in most of their revenues, to develop the business. So you might not see, when you go and look at the financials eventually, you might not see like profits as such. You might see the results in the negative, but it is like a common model that has been tried and tested um, by companies in the tech sector. They are always like cash hungry to develop and to reinforce their dominant position in the market, to make sure that nobody comes in and takes their development that they have, and so they reinvest everything, so the value goes up, although there is no profits to share with the shareholders, so to speak, in general. Let's go and share my screen. So first of all, let's have a look as usual, at the economics news this week, because there have been quite a lot of movement in both the crypto and the share market. We'll see what actually drove that. The main news were on Wednesday, but even before Wednesday, even at the end of last week. First of all, we met obviously last Friday. So on Friday we had like when we had a session, we were waiting for the results of the non-farm payroll, which was published a few hours later, and the actual numbers were much higher than expected. So there was forecast to add 85,000 jobs to the economy. We actually was almost more than double that, 170,000. And so again, taking pressure off any interest rate cuts that might have been on the card for 2026. Because on one side, I remind you that interest rates are set with a double mandate from the Fed of controlling inflation which is one of the things that there was, one of the news that we will look at in a second for this week, and also keeping the labor market healthy. Now, according to these numbers, the labor market is quite healthy, so there is removes the necessity, let's say, of a stimulus in the form of interest rate cuts. And at the same time, obviously, we go like inflation that's quite rampant at the moment because of the high oil prices. And this is where we go back into like this couple of 2 or 3 days that we've had where we had inflation figures first like CPI. And you can say, although it was in line with expectations, we've gone back about 4%. So we're now at 4.2% in CPI and 2.9% in core CPI, in core goods. So it is quite high, and obviously the rate that the Fed is trying to get to is in the 2% range. So generally speaking, when the inflation is high, the measures that can use to control inflation are quite blunt. So one of the main ways of controlling inflation is the interest rates. So by raising interest rates, generally you keep a lead on expenditure, especially because people and businesses have to pay more to service their debt, and they got less to spend, to buy discretionary spending items. So in general, by raising interest rates, it reduces the amount of capital that it's freely going through on the economy, and so um, it depresses spending, and so that then it reduces inflation. That's the thinking. The only problem is that at the moment, this increased inflation, it's not really coming from excess spending. It's more like coming from producers produces inflation. So because of the petrol is so high at the moment, it's used in so many production the production of so many products, then the input cost has gone up a lot, and then obviously the price in the shops obviously needs to go up to cover the production cost. So increasing interest rates is not necessarily an instrument that would change that, because the cost of oil is the cost of oil, and doesn't is not influenced so much by the level of interest rates. Now, on yesterday, we also had PPI figures. Again, these are month to month. Let's see if I can find the year-on-year PPI figures on another site. Okay, so these are the producer price inflation. Now we are just short of 6%. Although they went down slightly from what was expected. They're quite is the prices are increasing at quite a pace. So obviously the prices of the prime goods increasing at 5.7%. The previous month was 6.5. It means that is going to reflect on the price of the end product that you do eventually find in the shops. So that's the kind of like a big worry at the moment, and there's a big pressure that it's almost like wiped out the expected cuts in interest rates that we were expecting for 2026. But at the same time, now we're going to see in at the next meeting of the Fed, because there's been a change of head on the in monetary committee and the Fed. We're going to see what the approach is to basically the Fed mandate of controlling inflation. Now we know that the previous governor, Jerome Powell, was kind of like conservative and kept the interest rates higher for longer. And there was like a big spat going on between Trump and Powell. Trump trying in every way he could to remove Jerome Powell and expecting him to lower interest rates, which he didn't do as expected, because he doesn't owe anything to the president. His mandate is completely separate from the presidential mandate and don't respond doesn't respond to the president, but completely independent. And so the new appointed head is expected to be more friendly to President Trump, as being expressly obviously chosen by the Republican Party, because they have convinced the majority in Parliament. And it remains to be seen what the policy will be going forward. So go back here. So we'll see the federal funds rate is expected. So the meeting is expected next week, or June the 17th. And this is the first time that the Monetary Committee meets after the inauguration of the new, of the new president, the new head of the Fed. And so not so much the rate that would be announced at the meeting, but where a lot of the attention will go on the statement and the press conference that's due like half an hour later, to understand exactly what the frame of mind is behind the decision to, or whatever they decide to do, whether they, as you can see, the forecast is for the interest rates to be kept the same. But it's the forward-thinking press statement and the words they use in the press conference that will show if there is like a softening stance towards interest rates, or if there is like what they call a hawkish stance of keeping interest rates high to control inflation. Now, if you look here on the left at this table, now quite a few countries now have started raising interest rates again. So more markedly, the Australians have started raising interest rates, and the latest, like this week, we are also at the euro. We'll go back. As you can see here, on yesterday, we also had the euro that raised interest rates by 0.25%, from 2.15 to 2.4%. And there is almost, like you can see, there are some countries, central banks, they are adopting like a wait and see policy, because I personally think correctly, they realize this high inflation is not due to, out of control spending, but it is due to input prices. They are pushing the prices up. And there are other countries instead, like Australia, like the euro, that want to be seen actively controlling inflation. They started raising interest rates. So it is like a very strange backdrop at the moment, and I want to show you, like going up into the charts, like how political decisions now are changing things like in a very, 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 very fast. Like we saw like beginning of last week from Wednesday, there has been like a turnaround in especially in technology, with many people worried that the technology stocks are like overpriced, and so there was like a correction of at one point of over 8% in the Nasdaq, and we'll see in a second as well, a lot stronger than that in crypto and Bitcoin. And then we saw like yesterday as the announcement. So if you look at the news, of Trump saying that Iran and the US could sign a peace deal as soon as this weekend, and as soon as that news came, there's like a turnaround in the market, where the market had been dropping, and then all of a sudden it's back up, and we'll see on Thursday when it went from top to bottom is like more than 3% move, which is like a large move for just one day. So so obviously the market worried about the part of the reason of the drops, apart from just hitting a new high and worried of the prices, is the interest rate outlook. Okay, because interest rates being higher than expected puts pressure on businesses. And on the other side, we got like excitement thinking, well, if the Iran war comes to an end and there is a peace deal signed, that will have an immediate effect on lowering oil prices. And as a result, then we could see then a natural reduction on inflation because obviously lower oil prices, then it will be lower price at the producer for producers and eventually lower prices for goods in the shops. So it could also wipe away the need of increasing interest rates to control inflation. And obviously, it is a good move, good news for companies. And this is why we see all of a sudden the reaction and the mood turns positive. And if we look at what happened uh, for a variety of items, not just like we've seen obviously the move down in technology stocks, uh, but also we saw the move down in metals. If you look at gold, look again at gold, drop down about 10% over the last week. And again, look at what happened yesterday. The excitement comes back into the market again. A climbing of about 4 or 5% in one day, which is like again, it's a huge move. Same for silver, and you can see like a very quick turnaround. Going from 61.5 to 67 again in one day. So we literally these are like big moves on the strength of political decisions. Okay, but a lot of the worry, because silver and gold also react very strongly to interest rates moves, and the idea that the interest rates will have to be on one side. This move on Monday was the news that the new hostilities on the Iran front, from both sides. Obviously, so there's kind of bad news coming in, and then yesterday, good news coming in, and so the market keeps going up and down often with something that's got nothing to do with traditional market movements, but more like for political decisions. And what we see here as well with Bitcoin, obviously Bitcoin has not been in a good place for a little while, but last week we were discussing, of this kind of move that was pushing towards potentially creating a new law, and it actually did on Friday. On the 5th of June, we actually hit a new yearly low. So this move now, we got another leg, let's say, into this move. Although the move wasn't sustained, the market seemed to pause, establish a new low. From the old low in February was 60,000. We touched, I think it was 59.1 on last Friday, and then we'll be hovering. There was a little move up on Sunday, and then we've been kind of moving down, 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 almost thinking everybody was thinking, are we going to see another leg down? And then when the good news came into the market yesterday, we had a kind of like a move up from the low 61s to now to 60 to 63. And I kind of will see again how that is impacted by the EPO of today. But what it was, the thinking behind is that of this drop as well, that went from the mid 70s to the low 60s as well. We noticed that there was an outflow of money, especially from hedge funds, from crypto ETFs, with the idea that potentially that the money is rotating and moving back, getting ready for the tech IPOs. Okay, so there is a lot of excitement on both SpaceX and also the OpenAI and Anthropic, and we got there's several funds already come out saying that they want to take significant positions into these companies. Now, one thing is, now, if any of you is interested in the IPOs, there's a something I wanted to share with you guys, which I think can be useful. There is a safe way of approaching some of these IPOs. Let me just get this. Um, some of these IPOs, and if you can see, if you can see here, these are some funds here. They already have shares of all these companies in their portfolio. Okay, so without waiting, let's say if you wanted to have some exposure to SpaceX, OpenAI, and Anthropic, it would be enough to buy shares in one of these funds to get exposure without having to get involved in the IPOs, because these companies have got pre-IPO shares, and they are like closed. So they're not companies, sorry, they're closed funds. They're closed funds because ETFs are not allowed to buy shares on companies that are not they're not publicly traded. So, but there are these like closed funds. They're mainly technology and innovation funds. They have got big positions already established in this company. So apart from the third one that doesn't have exposure to Anthropic, but the other three have got positions in all three of them. With, for example, the Destiny Tech 100 has got like a 40% of their assets under management are invested into these three companies. Fundrise like 35%, and the ARK Venture Fund, which is that a lot of you may know as, Cathie Wood, has got a 26% exposure. So all of them are heavily invested into this, and it could give, any of you that they are interested, potentially a potential to get some exposure to all three without getting involved in the crazy up and downs that we will see when the IPOs are actually underway. Okay. Now, the other thing that would be good to have a look. So let me just get the open. Sorry, let me stop sharing for a second. I just want to open. We're talking about Cathie Wood. I just want to open the document. The big ideas research of 2026 that talks in particular about many different types of technology investments, but in particular as well also about Bitcoin. And it's good at this moment to like refocus and thinking where some proper research what some proper research thinks about the potential of Bitcoin in the near future. Okay, just give me a second. In the meantime, if you've got any questions to ask while I'm doing this, feel free, or if you want to participate in anything. I need to find it again. I can't find where I stored it. Just give me a second. We'll go again from the company. Okay. Okay, let me share again. Okay, so ARC is well known for they bringing innovation ideas and companies that are involved into innovation to the investors through the closed funds and through the ETFs. Now you can see here, yeah, I would encourage you all to download this report, which is 111 pages, so it's not like a quick 5 minute read. But you can download it from free from the ARK Invest website here. Okay, ARK-invest, sorry, yeah, ARK-invest.com. And you just need to basically just give them your email address to download the report for free. Okay, so it doesn't cost you anything. These are the kind of like the case that they do in all these different technologies and what they are actively investing in, companies that invested in these fields. And so it'll give you an explanation not just on these technologies, but how they connect to each other. So you can see from autonomous mobility to neural networks to digital wallets, smart contracts, and cryptocurrencies, and so on. So there are some ways in which all these different technology combine with one another to then improve the results, this convergence network scale, which, as you can see, it's increasing from year to year. Okay, now without going through the whole report, which you can read at your own time, I just wanted to have a look at this middle part. It talks about Bitcoin, tokenized assets, and DeFi to quickly analyze it with you. And so if we go on to Bitcoin and here it tells you the recent movement in price in Bitcoin, and also the most recent bits of news that could affect the Bitcoin price up to the end of last year. So you can see how the price moves, and then the different announcements for they affect the whole crypto market. So on the latest, I mean, talking about November, December last year, for example, we had the launch of the Bitcoin Strategic Reserve for Texas, and also Vanguard finally granted access to Bitcoin ETFs for its investors. And Vanguard, one of the biggest companies in investment companies and managers of investment funds and ETFs. Now, the biggest thing to note is that by the end of 2025, both ETFs and public companies together held about 12% of the total Bitcoin supply. Okay, so that shows you how Bitcoin from a niche product is now becoming kind of like mainstream, as now like over 12% of the supply of Bitcoin is held by companies, public companies, and ETFs. So now, in terms of like investment, we talk about generally about Sharpe ratio, which is the risk-adjusted return. And it's interesting now Bitcoin has also, because the kind of underperformance of altcoins has actually increased the distance between the risk-adjusted return of Bitcoins and ones of the major altcoins like Solana and Ethereum, and the top 10 CoinDesk coins excluding Bitcoin. So these are the three other histograms. The yellow one being Bitcoin, the three others being Ethereum, Solana, and the top 10 excluding Bitcoin. And also another thing to note is that in this cycle, to be considered like the bear cycle for Bitcoin, we had the drawdown. It's in respect to the all-time high, it was much reduced compared to what we've seen in previous cycles. So obviously remains to be seen if we have touched the bottom yet or not. But at the moment, the drawdown has been just over 50%, where in the past, we've gone to 85% plus in terms of distance from the all-time high. And these are the assumptions for Bitcoin growth that have changed. The assumptions have changed slightly, but the forecast remains pretty much the same. So as you can see here, the expectation of Bitcoin, so the expectation of still of Bitcoin to grow to around 1 million by 2030. And it's not just a number picked up from a hat, but it is based on these different expectations and assumptions from these different markets. So Bitcoin is expected to attract institutional investments, and if you consider the total market, which is about 200 trillion of the global market portfolio, excluding gold, and then there are the three examples. So in the bear case, Bitcoin will represent 1% of that market. In the base case, the middle of the range, 2.5%, and the bull case, 6.5%. And you can see that the effect in form of a market cap impact, even in the bear case, is like this is expected to have a $2 trillion effect on Bitcoin. The base case, 5 trillion, and the bull case, 13 trillion. Okay, so this is how they work out their projections. And also the same thing, what the expectation of Bitcoin becoming digital gold, so taking market cap away from gold. And this is again the 20, 40, and 60% in the three cases, bear, base, and bull case. But because of the increase in the value of gold, then the impact in terms of the money impact on the price of Bitcoin is also increased, going from 4.9 trillion to 9.8 trillion and 14.6 trillion. I mean, I remind you guys that at the moment, if we look at the sorry, I'm just going to crypto. The total market cap of crypto is 2.15 trillion. Okay, so just imagine the effect of any of these things. Obviously, it's like they're still like more than 4 years down the line. But so we're talking about just the impact of achieving 20% of the market cap of gold. It's, just that will have an effect of 5 trillion, just 2.5 times the value of the whole crypto market cap today. And then these are the other things. The emerging market safe haven, again, which is obviously the impact it's a lot smaller than the established markets. And then so these are the two assumptions that have actually changed. And so the digital gold assumption has actually increased because of the price of gold. And the emerging market has actually been scaled down because there's a smaller penetration than expected. So the numbers have been reduced from there as well. But the others have stayed pretty much the same. So nation state treasury, again, from 0.5 in the bear case to 2.5 in the middle one and 7%. Again, we're talking about not in trillion in this case, but still in tens of billions, from a trillion for the bull case, 375 billion in the base case, and 75 billion in the bear case. And then again, corporate treasury, things that we've seen already in like Tesla and SpaceX and MicroStrategy. So there are lots of companies that established Bitcoin treasuries so that they keep their funds in Bitcoin rather than in cash. And again, as you can see, the impact that the different expectation can have in that. But overall, we're going from a minimum expectation of kind of 250,000 to 1 million by 2030. And this tells you as well what the digital assets could reach 28 trillion in market value in 2030. Okay, and most of it kind of like in cryptocurrency, but also there's a lot in smart contracts. So this is one side on the directly native crypto side, but also the other big market that is about to, it's already started opening, but is about to increase a lot more, especially after the Clarity Act goes through, already, thanks to the Genius Act, financial institution as reassessing their stablecoin and tokenization strategy. So we can see all these events, they have happened in the last 12 months. So the Genius Act went into law in July 2025. And we have all, for example, Circle launched a layer one network, Stripe launched as well a stablecoin focused layer one network. There was a US dollar stablecoin launched by Wyoming, etc., etc. So there are all these events. Even Visa that launched a native stablecoin settlement via USDC on Solana. JP Morgan launched a tokenized money market fund on Ethereum. So there's so many moves towards the new economies that's being created, the new tokenization strategies. That it's incredible. And if you see here, in terms of when you compare the stablecoin volumes, which is the black line, compared to the legacy payment systems, which is ACH, basically clearing house that transfers through banks. Look at the Visa payments, the green line. The PayPal payments is the yellow lines, and remittances is the red line. You can see that there's only one line that's increasing, and now they are taking a big chunk. So the volume of stablecoins in December was 2.3 times larger than the combined value of Visa, PayPal, and remittances put together. So it's quite a lot. So you can see how how the new digital payment system are now increasing in use case compared to legacy system. And you can see why, at the moment there is like some fight back for the Clarity Act if to allow stablecoins holders to receive interest on the payments or not, because this is a direct competition for bank deposits, which will change the whole structure of the economy, and how banks are at the center of it. They could they worry that they're going to lose their position as intermediary between people and where they use their funds. And so already in 2025, the market for tokenized assets tripled, and it's still very, very small. So we're talking about 19 billions in 2025. So it's still tiny compared to the overall stock market and derivatives market. But you can see how we're starting here to see that now there's US Treasury debt, private credit, private equity, commodities, non-US debt, but in particular the Treasury debts and private equity taking the lion's share. And there are platforms like Ondo Finance, for example, where you can actually go and buy and sell tokenized assets. These are the major blockchains for on-chain assets at the moment. So it's still dominated by Ethereum and Tron, and then BNB and Solana coming afterwards. Now, interesting. Look at this. Look at Avalanche. There's an interesting news as well that news I'm going to share with you in a second. Avalanche has launched is actually on the stock market. The Avalanche Treasury is now being quoted on the stock market, although not with, it's only been around for a couple of weeks. That the charts don't look too great right now because they launched just when the big crypto move down in price happened. But again, the global market for tokenized assets could reach 11 trillion by 2030. So what is now, when you're talking about now 19 billion, from 19 billion to 11 trillion is quite a difference. Okay, so we're talking about for 20 to get to 2000 is times 100, so it's roughly about times 500 the current market. So you can see why companies like ARK Invest are excited and are positioning themselves into this market. So they don't care too much about kind of volatility, price of Bitcoin being 80,000, a few weeks ago and being 60,000 now, because they can see down the road, and they can see where that it's whatever price manipulation there might be at any stage, the usage it's growing every year, and the use case for using crypto is growing every year. And there are like plenty of companies now. They are launching their own infrastructure, so their own on-chain infrastructure. So like, Circle, Coinbase, Kraken, OKX, Robinhood, Stripe, they all launched their own company branded blockchain networks to support their own products. And we start seeing now products as Bitcoin-backed loans, tokenized stocks and ETFs, and stablecoins based payment rails. Okay. Um, Here we're showing you that the DeFi. We're not going to go into this as well because we don't have that much time left. But it's basically showing now the DeFi value capture and digital asset value capture has shifted from networks to applications now. So, um, if you see here, like the fintechs, the difference between fintechs and DeFi protocols as these are actually gaining. And now look at like Tether, Circle, and Aave, are now taking prime spot in terms of size now, and they are directly competing like with Coinbase and Robinhood. So it's starting to be a serious niche. We can see as well that some of these companies, like Hyperliquid, Tether, Pumped Up Fun, are some of the most revenue efficient company in the world. I mean, in particular, they were talking about like Hyperliquid generated more than 800 million in annual revenue with fewer than 15 employees. So that's why, from the point of view of investors, they look at these metrics a lot, and it's very impressive. And also here we see how like DeFi derivatives are taking market share for what was dominated by Binance. So now it's in the biggest competitor to Binance now is Hyperliquid. As Aster it's a similar protocol, but on a Binance Smart Chain and so on. So so where layer ones are now changing from revenue generating networks to being considered more of a monetary asset. So what's going to happen from now on? And I mean, one thing I'm going to say is that within this move that we have seen, and we can all like speculate on where it is going and where the market is starting to turn again. So I would say that each time that we've had a turnaround in the market, it's always happened towards the end of towards the end of the second year of the cycle. And so we saw here, for example, as the market bottomed towards November 2018, again here in right October, November of 2022. So we're getting close to that time here as well from this cycle. So from 2026. Now, if you see here, we've had generally like a period between June and the end of the summer that pretty much the price, goes up and down, staying pretty much as it is, and then there's the last rinse before starting to climb again. So it remains to be seen if now we are establishing a double bottom here, what we're seeing right now, where this is the kind of the demand zone that is being respected at the moment. So we have touched all the way almost to the bottom of this zone, and now we have kind of moved out of it again. So it remains to see if there is like a higher push up, especially with money flowing back into risk assets following maybe the launch of SpaceX IPO today. But what was I saying in terms of distance from the previous market high, especially here, the last cycle bottomed out at 21% from the previous high. Okay, so which was in 2000 and December 2017. So if we were to do the same thing here from the previous high, which was in 2021, we have to take a move down of 21%. That would take us to a low of about 54,000. Okay, this is exactly the same move that happened in 2022, basically. Okay, before the market started turning around. So compared to the high of the previous cycle, the market bottomed out at 21% distance. So again, if we see here from the current, if we go and see where would that be? Oh, sorry. Where would that take us from the current move? See, it was not that far away from where we were like this just a few days ago. So if we touch 59,000, and to imitate the same move that we saw in the last cycle, we only need a further push down that will take us down to where the market really after the launch of the ETFs, and in January 2024, and the control move down that there was since then. This is when the market actually started moving a little bit more aggressively, as if on the bottom of this move here. So I wouldn't be surprised if we were to touch this move. But also the other thing that's interesting to say is that when the market turned, these are numbers from now, not compared to yesterday, but if we look the numbers for yesterday, we saw many coins have actually moved like 8, 9, 10%, within a 24-hour period. So when the market turns around, it does turn around very, very quickly. So we see here, so this is Bitcoin, obviously. Generally speaking, all coins move then faster than this. So just in this example, so there's a 50% move just from September to December. So in a quarter can move as much as that. And if we go and compare it to then when the market actually started growing here in 2022 again, or in 2020, we can see here that the market really started growing towards the end of 2020, from mid-October. Even the first wave from October to the end of January was 260%. Now, I'm not going to say that we're going to do 260% now in 3 months. It probably is not realistic right now, but still, the fact that we can make a move similar to this, so repeat in a way something like this, is not. It's wholly expectable. Okay, so this is almost like 100% move in 3 months again. Okay, when the market moved from 54,000 to 108. So you just need a little bit of more certainty from the Clarity Act. That's from one point of view. This is from the legislative side. On number two, a little bit of good news from the point of view of outlook for interest rates, and that could come as soon as the next meeting of the Fed, and then a renewed interest in risk assets. So again, the three big IPOs that we're seeing could show what the appetite is for risk assets. At the moment we are. Where are we? So you can see this is Yahoo Finance. So they have a countback clock for the SpaceX IPO. So the launch is $135 on prediction markets a few hours ago. The expectation that the pricing for today was around 165, $162. So we might see, but it's come down quickly from over 200 to 160. So remains to be seen. But I would encourage all of you to follow the launch today, especially to see how price moves within the first 24 hours, because that will tell us a lot about what the kind of appetite is for these big launches, which could represent a big chunk, a big chunk of the Nasdaq or the S&P by the time they've been introduced and start being part of the indexes, which will take a little while. But the other things that I wanted, a couple of things I wanted to share with you. So this is the news about Avalanche. So Avalanche Treasury Company is set to begin trading on Nasdaq under the ticker ABAT. Okay, which it already has done. Okay, this was on June the 12th, so like today actually, but it's already so because it's like a reverse merger. So the ticker is already available in trading, but it hasn't been reflecting so it's still named as Mountain Lake Acquisition Corporation at the moment. But you can see so there's been like a reverse merger, but when you go and look at the at the news, the news on the right hand side, it says here. So this is from yesterday. Okay, let's say today. So, so the Avalanche Treasury Corporation was trading at $3.12 per share. So we can see at the moment. So that was like the news from yesterday. Now it's at the moment is, this was the day of the launch was yesterday. So it's already gone down to about $1.85. So it wasn't the best launch they could have hoped so. They have hoped for, but it's the idea that now we're starting to have this crossover between traditional investments and crypto investments that are now coming to the stock market again to be publicly traded, and we're going to see probably more of this in the next few days and months. In terms of outlook, guys, I mean, I've covered this several times. For me, the outlook hasn't changed. What has kind of surprised me and probably many other people was that we haven't had during this cycle, really, we haven't had any altcoin season as we have in the past. But it doesn't mean that. So this is basically the market have been almost like taken over and overshadowed by the launch of the ETFs. But we still with the same idea and the same I would say original expectation is that with the increase of price of Bitcoin, we will see also a move in the altcoin markets that we see here, where Bitcoin is actually now technically at least broken down and created a new kind of established downtrend. The altcoin market, so this here is the total altcoin market, excluding the top 10 coins. So we still haven't reached the peaks of 2021 during this cycle. The peak was in December 2024, but we still haven't broken through. Actually, we haven't broken through the bottom, even with the drop that we've had recently. Okay, the Bitcoin dominance is sitting now at 59%. And so we still see that during the previous cycles, we went down from 70 to all down to the high 30s, like 38, 39. This hasn't really happened in this cycle. Yeah, you can see the maximum really that since we topped out at about 66% dominance, now the maximum that we've gone down is about 57%. So it's still a market that's highly dominated by Bitcoin right now. So this is why when we do these crypto hours that we focused a lot on the price of Bitcoin because everything else at the moment is irrelevant because until this turns around, nothing else is going to move on its own. Okay, so I'm keeping an eye mainly on the price of Bitcoin to determine when then it's the right time, to take, because already Bitcoin is higher risk than any traditional investments. So all coins are like multiplying that risk by 10. And it's not quite, they haven't really started paying off yet during this cycle at all. Okay, so we'll see what the future brings, but where I expect this market to start turning around, it's really, and this is for the total market of Bitcoin is to again to follow the moves that we had previously, because we all thought that the cycle was changing, but in effect, it hasn't really changed very much. So the cycle is still being dominated by the miners selling their Bitcoin, which they've done a lot later than in other cycles, because they had a lot of financing from Wall Street. But now, a lot of the miners as well are repurposing and moving into AI, producing data centers for AIs, and they are selling some of their Bitcoin. So this is what causes as well some of this price pressure that has taken the price down. But that's selling pressure as a maximum. And once they run out of coins, which again we expect it to happen along the same time towards the end of the last quarter of 2026, we will see then the budding beginning of a new bull market that you know would take us to top up the previous high. You can see now we have dropped more than half of the market cap, from not only from the top in 2025, but even from the launch from 2024 when the halving event happened. We still dropped like 30% from there, which is a huge move down. So we are getting closer. What I'm saying to you all is that it's not the time now to start selling your crypto, but it's just like a little bit more, a little bit more patience is required to actually say, yes, it is time to put any remaining kind of funds that you allocated to crypto to more risky opportunities. But I would say that in a couple of months we'll probably be closer to getting in the right place to start looking up on the upside. In the moment, just watch what Bitcoin does, and for first indications of a turnaround. Okay, so this is at the moment. I would say if this level doesn't hold, at the moment we have about $5,000 away from the 58,000 level. We might get the next things where the price could stop are again the indication of the same move as the previous bull market. So the 21% move down from the top, which would be represented about 55,000. Or if really we had a really, really, really bad move, we could go all the way down to the price when the ETFs launched, which is in the low 40s. But I expect the market to start turning around, somewhere. It could even be that we establish now a new bottom from this cycle. Probably we will go a little bit lower, but if there is excitement that's flooding back in the markets, we might see this happening sooner rather than later, happening at the end of the summer. Okay, so I have actually come to the and um, on the market. And I'm not quite sure what link you were referring to, Cherry.
It was the link for the ARC thing, but I found it because that link that I typed in gave an error, but I just went to their homepage and I've signed up. Thank you.
Oh, okay, fine. That's fine. So this is actually,
Just can I ask a quick question just on the IPO? I mean, is there a
yeah,
chance that because there seems to be a lot of speculation in the market that retail investors are kind of the tail end of this investment, and with the so-called losses on X and I think on Tesla, that it's kind of like a dumping ground opportunity. So all the kind of private investors, the private network circle that have kind of bought the pre-listing, the pre-IPO shares, are waiting for the price to pump a little bit and then just dump it on the open market to kind of get out, and that we're the
yeah,
last
yeah.
buyers to get in.
So any previous investors have got their shares vested. So the only shares that can be traded at the moment are the ones they are released in the IPO. So they can be doing that at least 6 months. You got at least a 6 months window before they can dump any shares. With some of the original investors have got like 12 months vesting, and some have got 6 months vesting. So the earlier they could dump any shares would be 6 months from now.
Okay, thank you. And that's confirmed, eh? That's 100% confirmed.
Yeah, you can Google it. Yeah, you can
All
Google
right.
it.
Thank you. Thanks so
Yeah.
much, Luca.
No problem. So guys, I'll need to finish the session here as I've got coaching sessions straight away. But if you want to know more about crypto, I'll encourage you to follow Jonathan's session that starts shortly after that. Jonathan, if you don't mind posting the link. I mean, I suppose most of you would have the link already. But yeah, it's more for there's lots of news as well in Cardano that we didn't have time to cover today. But Jonathan will be sure to update you on. If you quickly put the link in, because there we are. So I'll give you literally 10 seconds to copy the link if you need to copy it. And otherwise, I will see you all back here next week. Same
Thanks,
place,
Luca. Cheers.
same time. Thank you. Have a nice weekend, everyone.